Hello, Sky Traders. Welcome back to new YouTube video. This is Mina, your trading coach, and today we're gonna go through and discuss the S&P 500 E-mini futures contract. As you may know, over the past few weeks, months, there's a lot going on with the forex market. A lot of manipulation because of the inflation and U.S. dollar index. The charts are not clean, and a lot of traders are knocked out and lost their money over the past couple of weeks because of the news, because of the unclean charts. So I would really recommend you to also check the futures contract, check the indices, check other markets during these times. I know that a lot of you trade Forex. I know that a lot of you are interested to know more about Forex, which means that even though we're gonna have weekly recaps normally, about the forex pairs, but also we're gonna look into futures contracts, especially the S&P 500 E-mini contracts. So without further ado, let's get started. Now, as you may know, over the past years, we are in a bull run on the S&P 500 contract, future contract. And you can identify the institutional order flow by figuring out and analyzing those kind of high pressure buy candles that indicates the participation of market makers in the market, and they are always pushing the market upwards, right? And always there are trapped sellers during these bull runs, and you can easily identify them by high pressure sell candles followed by high pressure buy candle. Like literally after each high pressure sell candle, there is a high pressure buy candle, trapping out all of those traders and breaking this market structure and always trading back, then continue the bull run. The market is so clear in here. Pure price action, pure breaking of structure, trading back, breaking of structure, trading back, pure price delivery conditions, expansion, consolidation, expansion, retracement, expansion, retracement, expansion, consolidation, expansion, consolidation, expansion, retracement, expansion, retracement, expansion. And then starting from the bear market, we expect a reversal. So all of the previous higher lows turn out to be liquidity hunts that the market is trying to target, right? Bearing in mind that this is our trading range, but that again does not mean that we need to complete the trading range, because you need to give a good care about the Fibonacci retracement. If you draw your Fibonacci retracement level, you're gonna find that on 3rd of October 2022, we touched the 50% Fibonacci retracement level. What does it mean? It means that market makers and big whales buy at the discount price or below the 50% Fibonacci retracement level and sell above the premium price, right? We had small consolidation, then high pressure buy candle, retracement, trapping sellers, followed by another high pressure buy candle, breaking this market structure, retracement, high pressure buy candle, and now we're trying to break this market structure, right? So what are the next levels if we're gonna retrace from this 50% Fibonacci retracement level? This could be a potential level, liquidity hunt. This is another liquidity hunt. This is another liquidity hunt. And this is another liquidity hunt. So if you're looking for buys, these are the important levels. So how we can identify if we're looking for buys or looking for sells? If we continued this pattern of higher lows, right? With high pressure sell candles followed by high pressure buy candles to trap all of the traders and breaking market structure, right? If we're always targeting those liquidity hunts with a price action, with a pure price action, then this could be a potential reversal point to complete this trading range up there. And we can even expand more and more and reach new all-time highs. But bear in mind, we're still in a bear market. The bear market is not over yet. So on the long term, you should be more cautious if you're holding or if you believe that you're gonna hold starting from this level. So on the daily time frame, let's remove all of these drawings. Right, so on the daily time frame, what are you doing in here? Rejection. So this is considered stop loss reserves, right? High pressure buy candle. This is a market structure. We broke this market structure with high pressure buy candle, and a lot of buy orders are reserved in here. Consolidation, targeting our first liquidity hunt, creating an order block. Rejection, breaking this market structure, and consolidating to build more new buy orders that couldn't attack the previous lows. So we have more buy reserves over these areas and additional buy reserves over these areas. So it means that there are more institutional buyers. We broke this consolidation of the high pressure buy candle, trade back to the market structure, and now we are expanding. So what's our next liquidity hunt? This level, right? This is the next liquidity hunt, and this is the second liquidity hunt, and this is the third one. Why it's really important area in here? Because there's a lot of sellers and a lot of sell stops or buy stops that if the market's gonna go up, it has to attack these levels, slightly retrace, and then attack previous more and more levels or higher levels. So on the 4-hour time frame, let's also remove the drawings. We attack this liquidity hunt, right? That's why there was a slight retracement. And we're always creating higher lows. And let's analyze this area, right? When we broke through this market structure, we tried to trade back. And then we again tried to trade back and penetrate through this sell stops, but we couldn't, right? And then we rejected during exactly New York session, where a lot of liquidity on the S&P 500 E-mini futures is there. And then slight consolidation, and we penetrated through this level the next day, right? During New York session. Trapping the traders, followed by a high pressure buy candle, breaking this market structure. So if you want to actually reach out to this next liquidity hunt, we need to grab more liquidity. How we're going to grab more liquidity? Through a New York session, probably today, tomorrow, but it has to be during New York session. Where is the area of liquidity? This is a potential area of liquidity, right? To grab during New York session. So if we penetrated through this area, with a high pressure sell candle, followed by a high pressure buy candle. We grab the liquidity lying underneath these levels during New York session. Today, tomorrow, I don't care. Then we are ready to push to the next liquidity hunt. But we need to grab liquidity first. How we're gonna grab liquidity? Creating a new higher low, penetrating through this liquidity reserve, breaking the market structure with a high pressure buy candle followed by a high pressure sell candle, trying to reach out to this next level, right? This is how we grab liquidity, and this is how we hunt the liquidity resting above or below specific level. If you reach out to the 15 minutes time frame, you're going to understand what I'm talking about. If we analyze the previous days, let's look into this level. We had consolidation scattered over these levels, and we penetrated through this liquidity reserve during New York session, right? Creating a high trap of high pressure sell candle, breaking it, trading back to this market structure, expanding to the next liquidity hunt. This is what we're looking at. We're looking during New York session to penetrate through this reserve, or at least create an order block with a high pressure sell candle followed by a high pressure buy candle to target the next liquidity hunt. What's the next liquidity hunt? This one. And then we can consolidate to target the next one. What's the next one? This one. Then we are gonna consolidate to target the next one. What's the next one? This level. You can find in here 2 or 3 or 4, even 4 opportunities. You just have to wait, be patient until you see this market structure forming in the market. The S&P 500 E-mini futures contract is so clean right now, rather than the Forex markets, or most of the Forex markets. So you can see all of the price action happening. Open your charts, check your analysis, do your drawings, set alerts, and wait for New York session, see what's going on, and manage your risk during the trade. You're going to find a lot of opportunities over the next few days. Thank you so much for watching. This is Mina, your trading coach. See you in next videos.